We have Bitcoin today at $87,000, and in today's show we're going to talk about, can you trust the pump? You can actually vote in the poll section below. Do you trust the pump? Yes, the bottom is in. Yes, you will buy higher on the next high low, or no, you are going to short it. And let's get straight into today's show. I do want to start off by having a look at the bubbles, which you can see, of course, a sea of green. Some of the coins putting in nice relief rallies over here with double-digit gains. We'll talk about Sonic, which is also up 13%. We'll look at some opportunities. There are some opportunities currently within the crypto markets. And then, of course, we definitely have to be talking about the stock market, which will be opening up later today. Is it time to pop these champagne bottles? That is the question many of you may be wondering, because we are seeing a little bit of a short squeeze. This is in the short term. There's some key levels that need to be reclaimed. We have Tesla, which is only up 1.53%. So there may be an opportunity within some of these coins. I do have some trade setups for you on both the stock markets as well as crypto. So smash the like button, hit the bell notification, and subscribe to the channel. Let's get straight into the show content. I really think Elio Trade's tweet over here summarizes the sentiment within the current market. He says, inside me, there are two wolves, right? Two wolves over here. One, you got the bull. Two, you got the bear. The bull is sentiment feels like there's just no way that we can possibly go lower. Sellers have already sold and capitulation has already taken place. Remember, you get two types of capitulation. Price-based capitulation, which I actually don't believe that we've seen yet. And then you get time-based capitulation, where you can hold sideways in a boring, choppy market for a very, very long period of time. Now, we may still be in that, right? So that's something we do need to be aware of. And then he says over here, part of the bull thesis, markets are due for some form of a relief rally. And at the very, very least, you will get a spike towards the upside, which we may be seeing the start of right now. Tariffs, etc., are priced in. He says we have regulatory clarity and stable coins are on the rise, right? Putting in a new all-time highs, and maybe they do actually go and buy BTC or cryptos with those stable coins, right? And we'll look at as well the USDT dominance, and that potentially breaking down some key levels. If we do get that, well, that will be good for the crypto market. So we could be in the process of making a bottom, but then the bear case, you know, there is still this overhang where Trump wants lower and getting his way, him against Jerome Powell. Remember, Jerome Powell has been explicit in saying that he's not going to change anything until interest rates hit 0%. Which means they need to overshoot the 2% mark because it is sticky and it sometimes bounces back. And then on top of that, we're only going through quantitative tightening is slowing down. It hasn't fully ended yet entirely, and we're not yet in that phase of quantitative easing, right? So that's one of the bear cases that we haven't seen that come in. Market's still not sure if tariffs are real and therefore maybe not fully priced in. You can put that on the bear case as well. People financing Chipotle burritos, meaning basically people are just struggling, right? The average user in the world is struggling. They don't have money, right? Especially not for crypto. So a big week ahead, another big week today. What do we have to look forward to in terms of economic information? We have flash manufacturing PMI and flash services PMI. And then you got a couple of other events coming out later this week, which we'll discuss when more relevant. So that's one thing to look at over there. There are also some earnings coming out. So Trump tariff news, look out for that. US core PCE inflation, US housing data. And then we have earnings within a couple of big stocks, COINBASE, IPO. So these are the things to look out for this week that's going to drive some volatility. Here is your stock market at the end of the day. Don't be fooled. The stock market has still broken structure. Now, the only way that you get out of this is usually with a V-shaped recovery. If this is an orderly market, you would expect the next bounce to lead into a lower high and a rejection from anywhere between this 5,700 up to the breakdown level at about 5,900, which means if the market plays out normally, and there isn't some sort of intervention from the Fed that leads to a V-shaped recovery like that, then the expectation should be this, that you are going to likely set in a lower high, and in your best case scenario, you're going to rage back down and you're going to come back towards these lows and form a trading range. Alternatively, what you may see is a big push up and then another dip down, right? And then things start to break and you move back to fair value, which is going to be your 200-week moving average, and you find support at these low regions. Now, it's very, very rare and uncharacteristic that you'd see Bitcoin go up while the stock market goes down. Therefore, I think that the bias still remains that you should be highly cautious within the current market pumps until such time as Bitcoin can hold and clear above $92,000, right? So that's your S&P 500. That's what we're looking at, the bearish divergence. It is still intact over there. You have the Dow Jones, which has also done exactly the same thing and started to break structure, beginning to roll over. If you do have a look over here, of course, at the RSI, well, it's the same thing, right? You had that bearish divergence over there with price making high highs and the RSI making lower highs, and now that is starting to roll over. So we said expect that at some point there will be a relief rally, right? And for that relief rally, the targeted areas, what you want to do is you want to take out your Fibonacci tool and you want to measure from the recent high to the local low, and then you want to mark out where is your 0.382, where is your 0.5, and in extreme cases your golden pocket, which would mean a pretty strong relief into that 43,600 zone. So those are the areas of interest. Only time will tell. The truth is that nobody knows for certain if the bottom is going to be in for the markets over here or if we are going to make another leg down, which is where your trade setups come into play. It's all about the risk to reward. It's all about setting up a trade opportunity where you risk X amount to potentially gain a certain reward, and then you can look to hedge that position in the opposite direction. So that's where the trade opportunity comes into play, right? One of the things that we've been looking at for quite some time is Tesla, right? If we have a look over here, here is Tesla. Let's just quickly let that load up. Now you're getting these bottoming candles, right? A spinning top over here, or spinning bottom at least, a reversal candle, 2 in a row, 2 weekly candles in a row that look like that. I think that's an opportunity at the very, very least that you'll see Tesla put in a bounce. The other thing that we've been focusing on Tesla is the at least rising support trend line over here on the RSI, which has found support in December. It found support again in April, and now it's attempting to find support once again. And all of these have marked major bottoms where you get pretty sizable bounces, right? If you look over here, let's highlight them for you. So this was the one, it led to that move up. This was your other one over here, which of course drove that entire move up. And now you're coming in for the third test. Now, what would be incredibly bearish is, of course, if that RSI broke through that trend line and smashed straight through the bottom. However, this is the point of your risk to reward setup. You have your tool over here that shows exactly what your risk is if you actually take this trade. And I think because this has come down so heavily, it's been aggressively knocked over here on the Tesla chart, has come down. This has been one of the most brutal sell-offs, right? Understand this is more severe than the crypto dips because Tesla is a real world business that actually offers something, and they're dropping 55.6% in just a matter of weeks means at the very least you're going to get a massive rebound, right? So I think that rebound could be playing out right now. This is the zone that you're looking at. Stop loss below, not this week's low, but the prior week's low over there, which would be sitting at 212 if you want to be safe. Put your stop loss at 212, enter into the long trade over here, and conservatively looking at almost a 2-to-1 risk to reward ratio, that would take it to 1.9, right? Which is $320 on Tesla. I would target that. And I do think it's very, very possible, given the extent of the sell-off, that this could easily push up to 0.5, which would be the 50% level. And that would give you a 42% move, right? Pretty sizable. These are crypto-like gains that you can get in at least something that I view as a lot safer than trying to pick, various different altcoins. So please keep an eye out on that. If you do want to trade this, by the way, BTCC is the place to do it. This gives you your crypto look and feel in terms of your leverage slider. You have everything over here, just like you have in crypto. Set your leverage according to what your risk parameters are. Decide if you want a limit order, decide if you want a market order, place your stop loss, your take profit on the Tesla trade, as opposed to signing up to a brokerage account, which will also require a massive amount of information. So there's a link in the description below over here. If you deposit $200, you'll get $175 for free as well that you can add into the trade over there. So there is, and if you want to claim all the sign-up deposits, you do need to KYC. If you don't want the sign-up deposits, you can trade there without any KYC, and the link is right here. Click on that and make sure that you join. All right, there is other trades, right? Also, by the way, they trade crypto, stocks, commodities, forex pairs, So right now, these are our watch lists. This is what we're interested in. Tesla, S&P 500, NVIDIA, which I want to talk about right now. MicroStrategy, Meta, which has actually been in a beautiful uptrend. Look at Meta. Meta's actually been, it's now broken structure just like the stock market. But if you actually look at Meta over time, this has outperformed Bitcoin, which is absolutely unreal. So Meta's one to keep on your watch list over there. And then the other one that we have is Coinbase. But going back to NVIDIA, right? We have to talk about NVIDIA. Why do we have to talk about NVIDIA? Well, NVIDIA has actually confirmed the death cross. I mentioned it to you last week. I said it's inevitable. The only way that you weren't going to get this death cross is if we V-shaped to 160 on NVIDIA. And that was, of course, very, very, very unlikely. Consequently, you've now put in the death cross between the 50 and 200 MA, which has now moved towards the downside. The previous time that we did see that, NVIDIA went down another 47% over the course of the next 6 months. This is what I'm talking about, guys. This is the seriousness of where the stock market is at the moment. Yes, play the long side for the relief into potentially the lower high. If it doesn't send a lower high, but instead V-shapes out of there, great. Well, you took the trade from lower, right? So I am advocating that you attempt to buy the dip on some of these, at least for short-term trade, and then you can allow that to position into a longer-term swing trade if the market permits, right? That's the point over there. So short squeeze, right? We said, as per the title, you're definitely seeing a little bit of a short squeeze. Look at the massive uptick over here in the 24-hour trading volume on the top left of the screen, 65% up, showing new volume has come into the market. This is FOMO buys, right? There's definitely some FOMO buys coming into the market. I'll show you why in a minute. Open interest is picking up, and the last 24 hours, the majority of the liquidations have come from the long side. Volume is still relatively low, relatively speaking, compared to where we were months ago, right? Over that November, December period, which means we still need to see a healthy uptick, and we haven't seen that. That could be a one warning sign that, jump into the market with caution if you are looking for long-term trades. Short-term trades, you always have your stop-loss position. That's a different thing. Long-term, should you be FOMOing in with your retirement money, with your house money, with your spot accounts? Not necessarily, right? We haven't yet broken structure. I would warrant some caution until you get above certain levels, which we'll bring up, of course, with the show today, right? So here you can see it, open interest rising massively. The last time we rose into these levels over here, you did get quite a big drop. You can see the open interest is building. Funding rate is positive. This favors the bears, which means if you're looking for the counter trade over here in the very, very short term, you probably have better chances of that rejecting, right? Because this is what we've previously seen. You're also seeing the fear and greed spike aggressively, and this is based off of yesterday's numbers, which means today, this is probably going to spike even higher, potentially into the greed zone. So sitting at 45 in that neutral territory, you have had a marked spike up with the open interest building up over there, funding rate going positive. That with low volume is a short-term warning, right? Why? Because you need to be careful. What may be happening is you may just be setting out the Monday range. Remember, we look at the Monday low over here. That's where the market opened today. So you could continue to run it up all the way. If you even run it up into this trend line over here, this is where you're going to need to get above, which is just shy of that $90,000 in the short term. If you set a massive Monday range like that, that's going to be the trading range for the rest of the week, which means any deviation, let's just pretend that the Monday high closes over here, any deviation above and below opens up a short trade for the rest of the week, right? Where you're going to then target the liquidity on the other side of that trade, which is Monday low. This is why I wouldn't be FOMOing into any positions as you witness open interest building and rising aggressively, funding rates going incredibly positive over there. You need more confirmation, because the daily exchange volume, which has been one of our key metrics to use to see, are we in a healthy environment? This is the, let's call it the blood flow of the crypto markets. Do you have healthy blood, right? Do you have healthy blood works over here? Or is there markers in your blood that are suggesting weakness and possibly disease? Well, for your little medical analogy, according to this, yes, you're sick, right? This is still putting in lower lows and lower highs. and it's still trending towards the downside, and we do need to see this tick towards the upside and break that structure. Now, that is possible, right? Of course, eventually the markets move through ebbs and flows, and eventually you are going to get that break. The point of trading and the point of looking at the crypto markets is that we want to reduce, as the market downtrends, we want to reduce and lower our validation or invalidation level. Validation if you're bearish, and your invalidation if you're bullish, right? So if price gets back, or other way around, validation if you're bullish, you need to get back above that level. Invalidation if you're shorting the market, you need to get above that level. That would invalidate you. We keep lowering that level down as this bleeds all the way through it. This is what's worked for us, right? This is why we're able to buy low, sell high, and rebuy back much, 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 much lower, right? This is how trending markets work. Now, it is true, you're coming off very, very low volume, very, very low volatility. Bollinger Bands have been tightening and squeezing in, which means all momentum oscillators have dropped significantly, and consequently, there is a big move that's brewing. So, of course, we want to be caught on the right side of the move, but you want to catch the bulk of that move, right? You can see it's pretty clear. We've highlighted this multiple times, right at that pink zone over here. This is your previous breakdown level, and this would be the case for any crypto chart that you're looking at. The breakdown level that led to this move lower needs to be reclaimed. Now, you can very easily see a move up into the zone over here, and it's still high time frame bearish because it's lower high and lower low structure alongside what the stock market is doing. Bitcoin is going to bow to whatever the stock market does, right? Which means be careful, right? As you do rally up into these zones over here, we really need to see price get above these clear levels, right? Clear above these levels over here. Your 21 weekly exponential is still angled towards the downside ever so slightly. It is mostly flat over here, but with a slight bias towards the downside and price hanging below. So we need to get back above that. But if you do see price get above this, right, and you are patient and you rather wait for the confirmations where it provides a safer entry alongside the stock market doing the same thing, and you see volume rising, right, then it would still present a very, very good long-term area to be buying, right? Why? Well, if we look at the short-term bubble risk over here, you can see we're currently sitting in the 0.75 to 1 region, which is where most of your reaccumulation bottoms actually occurred for the crypto market. When you study this, this uses a whole bunch of different metrics over here, as well as how far price is from the 20-week moving average. So are you overextended above or below? And according to this, at least, you know, and all the other metrics that you look in terms of risk levels, the risk for the long term is still pretty good as a buy zone, right? I would prefer for the technicals to line up. I don't buy in these fundamental reasons, but I like to use them as confluence. So if you can't get above these key levels, this would still be hanging around in the blue zone, which means you're still in a great zone to gain your entry, right? Not only that, but also for the first time now, we've seen the Fisher moving averages over here cross towards the upside. This also looks at the overextension away from the mean. How overextended is price, either to the downside or the upside? And what we've historically seen is actually some pretty sizable moves, right? We can look at the at least the majority of this bull run over here that we've currently had. Let's mark it off on the chart. And if you have a look over here, you know, you crossed up over there. That led to a pretty sizable move. You crossed up over here. This led to a huge move to the upside. And then the last times that you crossed from those lows, you can see it took some time. But eventually, once you crossed up over here, you led into a massive move. And now we're doing it once again. So will it be enough, right? Will it be enough? Theoretically, you could jump into longs. I mentioned this on Saturday already before this move on the Saturday stream, which coincidentally had very, very low viewers because that's typical of the markets. The times when it's most important to be there, the majority of people are not there. And the times when it's least important to be there and you should be profit taking is when the majority of the viewers are there. So, of course, you have the opportunity to turn all of this back towards the upside and get a sizable move, but these are the levels to reclaim, right? You need to get back above this $90,000 to $92,000 region. This is going to be your underside resistance. And if we get above that, we should also see a hash ribbons buy indicator. This refers to the miner profitability, and they have quite a strong weighting and control over the market, right? So following capitulation signals, which we've now seen, you soon after that get your blue buy signal, right? If we look over here, here's your last capitulation signal. Soon after that, a couple of weeks later, it leads into the blue buy signal. Capitulation signal at the lows over here. A few weeks later, blue buy signal. And if you line that up with the price, here you can see it, right? Blue buy signal and price rallies up. So similar to what we're showcasing over here, the metrics do provide the opportunity that you could actually get a sizable move. Also to mention, you have now reclaimed the 200 MA and 200 EMA with your first daily close above those levels simultaneously, which is a good sign, right? So we'll keep an eye out on that. Your RSI on the daily is also breaking its trend line. This is one of the first signs and indications that price may start to break out, because sometimes the RSI will lead price action, right? So there it is. Price needs to break this downsloping trend line and then reclaim some key levels. Again, I don't think that anyone needs to FOMO in and rush, because what's most likely to happen is something like this, right? If it is going to break out, what's most likely to happen is you'll probably get a big move up, and then you'll still come back in a couple of days time to form your next high low. And that's going to be the absolute ultimate entry, would be at that zone, because now you have much more to work with, right? A much healthier at least opportunity and entry point. So let's go on to the weekly over here. The other thing I want to look at is the weekly. The weekly, we spoke about this a lot. The prior 2 times that we put in a major bottom, it occurred at that 44 level for the weekly RSI. So it would be nice to see the RSI come back down one more time and test that. Actually, in the best case scenario, price creates a lower low and the RSI creates a high high, and then you have bullish divergence on a high time frame chart like this on a weekly, and that becomes a powerful buy signal. So this is your trading range, right? I'm going to quickly mark it out. I have just used the fib levels over here. So if you just mark out your fibs from ultimately the lows over here up until the highs, and you mark out your 50% level, we can probably just turn some of these off to make it a bit more clear. Let's turn off the 2.5, the 0.75, and we're just looking at the range high. This is your trading range high, mid-range, range low. As per last week, bulls take back control if you can get back above the mid-range and simultaneously get back above the breakdown level, which again is why we're focusing on this area, right? Around that 92,000, things start to shift. Your real level to reclaim is this one over here, right? So there's still time, right? There's still time. Again, most likely outcome, because it's high time frame trends are still down, is something like that, right? And as long as you're aware of that, you should be well protected. You also have a swell of liquidation starting to build on the 3-day time frame. If you see on the 48-hour time frame, you can see it over here. You got about $23 million worth of liquidations coming in at about $83,000. So that would allow for those bullish divergences to once again form on the high time frames if price can start to move back down to those zones. Here is your 4-hour price directly into the resistance. Again, line that up with this. Build up in open interest, a rise in the funding rates over there, and price coming, of course, into the 200 EMA. These are significant levels that must be cleared. So over the course of the next couple of hours, we can watch to see, is price able to break through? The last couple of attempts into this has failed, right? Ever since that major breakdown over there, you can see you consolidated and then you just absolutely nuked. You couldn't close any candles above that, right? So the 200 EMA on the 4 hour is going to be a significant zone. If you reject over here, that becomes a trap. And the opposite of today's short squeeze can easily flip into a long squeeze, where you squeeze all the longs building up, open interest rising, funding rates rising, and then you smash them back towards the downside. All right. Nevertheless, I think one of the most important charts to look at, which is inverse to what's occurring on Bitcoin, is the USDT dominance. As the USDT dominance comes down, Bitcoin goes up. And now you're coming back into that trend line over here, right? So again, your true area of safety for new swing position would be taking out this level on the USDT dominance at 4.6%. This was your manipulated Trump move over here, where Trump went and tweeted about crypto and got people excited. He did it again, by the way. He did it again on Truth Social. We'll talk about that, right? There it is. I love Trump. So cool. The greatest of them all. And Trump only went up 12%. I told you guys that coin's going to zero. Any of these things, if I saw this when it happened, I would have opened the biggest short on this. This coin's going to zero over time. Mark my words. So anyway, rising trend line over here, you need to drop below these levels over here. If you break below this 4.6%, of course, you'll break the trend line first, set in a lower high. So we'll get an early warning. Then things can start to turn around. Otherwise, you're really in the middle of no man's land for both Bitcoin and USDT in this zone over here, right? So for me, it's a matter of, break below there or tag this level for longer term swing positions. So we're still building some trades over here. You can see we are up on the positions. That is for, of course, Pinex with our trading bots over there. There is links below if you want to copy those. And hopefully on the ETH one, you can see we're up about 16, 17% there already. It's been one of the worst quarters ever, right? The worst quarter since 2018 for ETH, down 40%. That's brutal, right? Absolutely brutal for ETH. Will Q2, Q3, and Q4 look any different? I think it's going to depend on a lot of different things. If we are still in a bull run, which according to this we are, because we haven't seen anything significant over here in terms of overheated, right? We haven't seen above 1.75, which is the orange and reds, which is where all the cycle tops have been, right? None of that, right? Look at this. I mean, you guys can literally look. Let's use let's say the 2017 cycle as one example. This is where your cycles top, right? In that color coding. Let's have a look at the next one. Let's go from the 2019 into the 2021 top. That's where your cycles top, right? In that kind of color coding. What have we seen in this cycle? It's been very mild, right? Very, very mild, underperforming the price cycles by a lot. The fact that we're this far into the crypto cycle and you're sitting at 0.75 to 1, interesting, right? So I think if the bull run's still on and we're actually going to move into these zones, then yes, ETH should move green in the future quarters, which means there should be a catch-up trade. But if you want to be safe before moving any Bitcoin into ETH, you need to see a lot happen over here. This would take months to play out. You need a market structure break, which means you need to get back above 0.0258, right? That's the level to reclaim. We've seen some slowdown and weakness in the BTC dominance over here. We haven't tested this 𝗪𝗶𝗴 area over here at 62.69. I'd really love to see that, but you're grinding it out over here, right? You're definitely grinding it out. And if I'm not mistaken, yes, you've already had the bearish cross between the 9 and 18 EMA, white cross below yellow. It is holding at a support now, so it may cross it back up. But if you do start to close candles below, that would start to roll over. We said confirmation that alt should outperform if you break below here. Let's see how the next couple of days form. We may be able to raise this confirmation signal to just under these wicks, but I want to give it a bit more time. It's a bit preemptive to call that. We'll see towards the end of the week, right? So coins to look at. I put this on your watch list a couple of weeks and days ago. If you manage to, catch any of these trades, please do smash the like button. Let me know in the comments as well if you did or didn't. But Sonic is one of the coins to look at, right? It's smashing all the other layer ones on most of the metrics, right? TVL divided by market cap, massive spike over there. You can look over here. TVL has just been rising. Active users on a monthly basis has been rising, and everything looks pretty good on Sonic, right? So the whale room traders have been trading this. This is a trade from this morning. Congratulations to everyone who took that trade, up already 72%, rounded up to 72% over there. And that is Sonic, right? And we mentioned a couple of trades, and you can see how they're going to be targeting up towards the previous month's mid-range. So previous month's mid-range, looking at about 64, 65 cents over there in the coming days on Sonic. And there's a lot of different ones to look at, which are still in a good zone, right? Here's Sui. Have a look at Sui. So Sui, long-term downtrend, which has been governing since the highs. Remember, we were one of the very few out there on YouTube where I exited this position all the way up over here because we had the break of structure. And the other reason is just because we made so much profit on Sui that we were like, let's just take it while we can, right? We took the profits over there. We had reason to do so based on the break of structure, and it's been down only. Now we have to pay attention to this because you're starting to reclaim the previous month's low, right? Here's your previous month's low. The reclaim of the previous month's low will simultaneously break you back into the trading range as well as breaking the downsloping trend line over there. And that creates a trade opportunity on Sui where you could trade this up to, again, the previous month's mid-range. So when you go about your business, make sure that you have a look at the charts, right? Go on the daily time frame, simply put out your previous month's high, previous month's mid, and previous month's low, and then go and take a look at what these charts look like, right? Here is Solana. Solana has already broken that downsloping trend line. It's holding the previous month's low. Remember, you can still get sizable relief rallies while the high time frame remains bearish, but this still creates trade opportunities, right? If you got a move like this and it still went down lower at a later date, I would personally still want to trade this, right? This is a big move towards the upside on a large market cap coin. From range low to there is a 42% move, right? Very, very, very similar to what I just showed you on Tesla, which remember you can trade over here on BTC.C. So those are some of the things to look at. Our whale room traders have been crushing it. It's not the only trade. We took the Solana trade 170% up there. Well done to Chris, one of our coaches in the Discord. And then the BTC long as well up 48.8%, really benefiting with his time zone, right? Being able to capture all of these trades and be awake as they happen, right? So if you're not in whale room, jump into whale room, right? There is a link in the description below. You get elite trade signals, pro strategies, which you can utilize, and a whole series of coaches that will take you through the A to Z's of trading, right? All right, let's get onto the Donald Trump coin. Let's go look at that Trump coin quickly. See what that thing is doing. So Trump, let's see it. Trump over here. Let's go official Trump. 1180. There's your spike up. Let's see if there was any short opportunity here yet. It got a bit of a move up. I mean, maybe I'd wait for something a little bit more clear. Because on the low time frames, there's actually still an opportunity that, this could continue to get bought up. I'd probably be watching this this was the pump over here as he made his tweet over there. So maybe treat this in the low time frame as a trading range. And I would look towards these wicks over here for liquidity and a bit of rejection, but definitely line it up with Bitcoin. I would only short these things if Bitcoin is actually going to go down. Otherwise, they could still continue higher, right? So that is your Trump coin. Let me know in the comments what else there is, and I'll make sure to bring that up. While we wait for your chart requests, guys, I do want to remind you there is a trading competition, right? Legends of Trade VIP Arena on Bybit. Use the link in the description below. You get up to a $30,000 sign-up bonus. So if you do want to join in, that is a $1 million competition, right? So you can win up to $1 million. Jump in, sign up over there. Everybody has a chance to win. The great thing about trading competitions is it keeps your tools sharpened, right? If this is your craft, it keeps your tools sharpened where you can stay in the game, right? In the game over here and keep your head in the charts over there and know exactly what's coming next. All right, let me know in the comments. What have we got? Bonk. Let's have a look at Bonk. Let's actually have a look at some. Let me quickly go to Bonk, and then we'll also have a look at some of the other memes. I'm curious because memes were one of the most heavy hit, right? So you are reclaiming those previous month's lows, which opens up the trade opportunity to the previous month's mid-range on Bonk. So if you do put in some proper relief, that's an easy 40% move, right? But high time frame, well, you can see this is coming into the resistance zone now. So you probably need to wait a little bit. I mean, I'll draw this as conservatively as possible, as aggressively as possible, meaning it favors the bulls the most. In that instance, you'd say it's already broken. If you want to draw it as conservatively as possible, then you're waiting for something like this, which means you probably need to get above the previous month's mid. So that's your conservative traders. Aggressives would already be probably looking for the longs. Let's see how PEPE is doing, also one of the biggest memes in the space, and very, very similar, right? There's your aggressive entry. Conservative, you can say it's already started to break that structure, reclaiming the previous month's low, which means this is how you take the trade, right? For any of these coins, this is what you do. You say, cool, you've reclaimed the previous month's mid. Of course, you need to look on a low time frame to time your entry, but I'd pretty much put stops below, Saturday, Sunday's candles, and then trade this all the way up towards the highs. You need to be really, really careful with this. Why? Open interest is rising. You can see they're actually already starting to flush them right here as we sit. There it is. The flush is beginning. It hasn't even hit that trend line yet. And you started to get the move down. Keep an eye out on this. Watch the open interest on the low time frame. Watch the funding as well on the low time frame. That shows you who the traders are that are opening up the positions. So if open interest was rising, but you're seeing red below, that would tell you that it's shorts that are opening up. Right now, this is longs that are opening up. They're FOMOing into those positions. Remember, fear and greed is rising. They're moving into the greed zone. Anyway, back to this, right? So be careful because of the open interest. Be careful as well, because you know the saying, never trust a weekend pump, right? And we did see a weekend pump this weekend, and usually they slam them on Monday or Tuesday. So that's it from me, folks. Thank you all so much for watching. Appreciate each and every single one of you. I will see you on the next one. Use the link below, take the trade on BTCC, and jump into Whale Room if you want to trade with us. And cheers for now.